Good morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 6th of July 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, blogs, YouTube videos, newsletters, chronicles, the portfolio service are all portals to an education program guiding you on the use of price analysis, trading and portfolio management. The Trading Centre is the culmination of this education process as we insert our approach into a real-life trading page on Stockradar's Trading Centre. That's where you find all the good stuff of entries, exits, reversals, stops, trends, and a trend intensity rating on each and every stock we cover. Look at each Sunday night for this important weekly update to the Trading Centre. Okay, that's what we do. This week in Trading Tactics, I'm going to look at the need to understand is perhaps a little bit overrated rather than the actual need to follow and manage. So we'll talk a little bit about that in Trading Tactics a bit later on. Okay, so firstly, let's get to the top 10. Okay, Brambles at the top, bit of a surprise package, Brambles, but it's kicking along nicely. It's come back to support and it's rallying ahead from that test of support. And trend intensity rating is 8. So it's at the top of the rankings this week. We've got some insurers there, IAG, QBE is in there. We've got Magellan Global Fund, which is an interesting one. Zero's in there, a couple of ETFs, and the Brickwork. So there's a bit of a mixed match there in carsales.com and GMG, all from a few different sectors there. So as you can see, stock specific analysis is where we're at, and that's what we do, and they're the stocks that are actually moving at the moment. Okay, so that's our top 10 trend intensity rating. So let's get to the market straight away and go straight to the Dow Jones. And resilience is probably the word I'd want to use at the moment because it just doesn't want to go down. Excuse me. So we've got this high here. We've had a correction back down. We've rallied up. We've found a bit of resistance through here, 1, 2, 3, 4 times, and we're testing it again. But still, you can see these buyers. They are just keen as mustard. So, the jury might be out, but, these guys are really strong, these buyers. So it's just a matter of these sellers, giving it a little bit of way, and we're going to see this market through here. So stranger things have happened, but that's where we're at the moment. We have a standoff, but we have both forces working pretty equally hard at the moment. They're both the resistance from the sellers and the eagerness from the buyers. So we've got reasonable volume down here. Momentum is just in the positive territory. It's above the average, so there's a slight bias to the upside, I guess, but we still have that dark cloud of cover to get through at the moment. Anyway, that's what it really looks like. The S&P and the Nasdaq, they're kicking along nicely. Good volume above the average, all looking good. Nasdaq's the same picture. It's broken that resistance well. It keeps moving high. We've got this great volume here. So those indices look okay, and with a mildly positive bias to the whole lot there. So that market's okay. The commodities are perhaps not such a different story, not such a similar story, I should say. Copper's still pressured down here, easing back down. We saw a bit of buying here, which didn't do a lot. There's still the sellers on top. So we've got this sort of slightly short-term hold at the moment, but really the trend is down for copper. Gold is just titillating us with this little move here. It's not going down, doesn't want to go down, but it's just holding there. So we've got to watch it. There's a bit of some selling to hit here pretty hard. I really don't know what gold's going to do at the moment. It's just we're pretty neutral on it at the moment. So we've just got to wait to see a bit like the indices, whether we're going to break through these highs or not. Okay, so that's the gold. Brent crude is a similar thing. It's just sitting there very boringly, not doing anything for weeks and weeks and weeks. So the trend is down, so that's where we lie with that. Okay, now to our market, the ASX 200 again, another word, resilient. Here it comes back again. We've got this all-time high up here, which is resisting. We've got some keen buyers here. And even now, we're seeing this week, not a lot of news, but it's kicking it higher again. So, there's certainly some support out there. Not that the leaders are taking off or anything like that. There's just a little bit of ominous support, I think, in the market at the moment. We just have to sort of, pick the eyes off the market. There's some good stocks there we can go through a bit later on. Some aren't doing so well, looking ready to break, but we'll just take the ones we can as they appear. So this is the ASX 200, and there we go, the stock big count. It's flat this week at 44 of 183, only 35 stock picks of 160, but they're all doing pretty well, and 10 ETFs of 23 there, okay? So market breadth is poor. Now look at the portfolios up to the date of the 3rd of the 7th, this Monday. The conservative portfolio is still sitting there at 8.7. It's 8 out of 20, 40% equities, 60% cash. Our flagship, the Energizer 5 stock, sitting at 3 out of 5. So we've actually lost a few stocks here this week, which is a little bit odd with what I'm looking at in the ASX 200. So it's sort of a bit of a fight going on at the moment. So we've got 3 out of 5 in that 5 stocks, so only 60% equities, which is unusual. It's still doing very well though, holding its own through these last 2 years. In fact, I think we're probably at the same price we were at February 2020, just before COVID. So we've really gone nowhere for 3 years. So just to survive at the moment is probably a good thing. And not losing money, making sure your capital's preserved for when this market does take off. Okay, the Energizer 10 is 7 out of 10. Again, a little bit of a comeback. 70% equities, 30% cash. Then the Energizer 5 August 20 is still 5 out of 5, so it's still strong. It's doing an 8% CAGR, which is not too bad since August 20. And the March 21 portfolio, 4 out of 5, 100%, the 100 data universe, 80% equities and 20% cash there. So they're all, we're doing okay there, but we've had a bit of a clipping of our wings on the portfolios there at the moment. Okay, so now let's get to some stocks I want to have a look at. So today, I really just wanted to go through a couple of sectors. Firstly, I want to have a look at the banks, because they're sort of interesting at the moment, or sort of not really, but I just want to see why we're seeing what we're seeing at the moment, so we can have a little bit of a talk about that. So ANZ to start off with, it's a fairly simple picture here of we've got pressure on the downside here. Let me just get in the name here. Okay, so this is what we saw, the big rally here back in 2020. Since then, the market has been going down the whole time. We've tried, but all these rallies are getting lower and lower and lower and lower, and the pressure's down. We're seeing a sort of a short-term stalemate at the moment as we go sideways, probably since November last year, chopping between about 23 and 26. We've got some fairly good volume going through here, which has sort of meant there's a healthy debate on what's going on here. But realistically, the downtrend is in place here for ANZ, and above here, we've got some significant resistance to get through before we really get clear of any gains, which is probably above $30 or $29. So, bit of a stalemate for ANZ at the moment. Trend intensity rating -7, really not going anywhere. Okay, Commonwealth Bank. Similar picture, we're just simply sitting in this trading range and have done for a couple of years. We get a little bit of encouragement, then it falls flat again. That's what happens in trading ranges. We really need to wait for a break of this range before we do anything. Trend intensity rating is -5. Really not a lot happening there. It really is a story in these banks. Take a yield, forget your growth for them. That's not happening, but there is some yield there to pay for you, to pay you. Okay, so we go to the next bank, National Australia Bank. It's also, we've seen we had this little bit of moment of lucidity here for a couple of months, but it didn't get anywhere near the highs. Well, got near the highs, but it failed. So we've got 3 fairly big tops here, up around between $32 and $34. The market has succumbed. We've seen some very heavy selling in recent weeks. It's sort of holding around S1, not very encouragingly, but it is holding. But you can see the average is pointing down, momentum is weak, volume is high, and this is still in a downtrend. So if S1 fails, and we're going to see some further falls here, trend intensity rating is -7. So not a healthy picture really there at the moment. We've got one last little hope here at S1, which may hold us up. But apart from that, it's not looking that flash. Then we go to Westpac again. And for you chartists, you'll know exactly what's going on here. This has been coming down for a while. Westpac, trend intensity rating is -6. Again, we've sort of seen a bit of a holding pattern for a couple of months here. But really the pressure is still down here. The highs are lower. We've got a couple of supporting lows here, which is a slight bit of encouragement. But for the moment, we're down. Some heavy volume, momentum is weak, and it's below the average. And if we look right back here, we can see exactly what's happened with Westpac. It's just gone down, down, and down for a long time, and it's still going down. Just a little bit of tentative support, which really hasn't encouraged us at all there at the moment. So that's what the banks look like. As I said before, if you're in the banks, it's okay. Take your yield and forget about your growth for the moment, because that really doesn't look like anything's imminent on that front for the banks at the moment. Okay, so now we're going to get into some trend reversals. Okay, first one I want to look at, I'm looking at insurers a bit today because they're doing very well. Insurance Australia has now broken high out of this range here, up around 650 or 550, I should say. We had one little attempt here which we failed and got stopped out. We're now back on this one. Trend intensity rating is +10 and it is rising strongly. It's above the average. Volume is very good. Momentum is very positive. So it looks all good for Insurance Australia. And again, we're sort of thinking, we're trying to sort of work out what's happening with these insurers, but all we know is that they're doing well, the share prices. So that's all we really need to know. As to the why, well, that's not that important to us at the moment. So, but it's just interesting as we go through these. You'll see there's a fairly clear picture, as we know, on these insurers. So Insurance Australia, a bit of a lagger, but it's finally got onto itself here. Okay, now before we go into any other insurers, I want to look at another trend reversal possibility at the moment for you, which is Fletcher Building, which, as we know, we made a lot of money on this in this last run up, a huge run up here. Stokes got a hold of it and it came back down, and now we're seeing this big accumulation phase, which is a good sign. We've got some support down here at S1. You can see down here very clearly some nice fresh buying and momentum. He's just popping above zero. So this is looking very interesting, Fletcher Building, because if we break through here, we're getting a trend reversal above here, which looks very good, and we've got plenty of potential upside there. So we're moving from the downtrend to the accumulation to the uptrend part of the cycle. So how far it takes us, we don't know, but it's all looking pretty good at the moment for Fletcher Building. So that's one to watch. Keep your eye on that one. Okay, now we're going to go back to the new highs. And again, we can look at all these highs. There's a few stocks here. They're all a bit different, but they've all done very well. So we've got QB here, which made a new high back here, back in November. Big sort of sideways action here for quite a while, a couple of years. We then broke out of that. We had some very good volume. We had some great momentum here. So that triggered this strong move up here towards the highs. This is a 7-year high up here, so certainly worth noting. It broke through. It diddle-daddled around here, teasing us a little bit, but throughout this period we were able to hold, and we're still in this stock at the moment as it makes a new high, and it's now starting to break clear of that long-term resistance level. So that's a very, very good sign for QBE. And again, we take that with the other insurers. The whole picture looks very strong there. Okay, so that's QBE. It's looking pretty healthy at the moment. The other new high I want to look at is NHF, which I know we've looked at before, but it just keeps going higher. A couple of weeks off here, bit of volume, bit of selling challenge, but it seems to be back on track again. Trend intensity rating is +9. Excuse me, well above the average. Great volume pushing this rally. Momentum is very powerful. You just have to stay with these trends as they come along. So that's NHF, which is looking pretty good. The other one, of course, is Steadfast. Okay, Steadfast is also pottering along. It's made some new highs back here, back in December, early December. And it's since rallied pretty strongly through here. Trend intensity rating is +8. It's sliding its way nicely above the average. We've got some reasonable volume here. It doesn't really tell us too much, but that's solid enough for us. Remember, it's just one part of the picture for trend intensity. And momentum has flattened off a little bit with some very strong moves here. This last sort of 2 months here has been pretty sideways, so we see momentum taper off a little bit. But all in all, the trend intensity rating is +8, and it still looks pretty good for Steadfast. So you can see there, the insurers are surprising us all, doing very well. We have all these catastrophes everywhere, but they still seem to make money somehow. So that's very good for shareholders. So the prices are going up for those stocks. So again, it's just a wave. It's just something you jump on when it occurs, and you wait until the market tells you that it's going to stop and to get off. So for the moment, we're still holding them, and that's where we like to be on those trends. Okay, just a couple of little small stocks for you. Tua, which is a little spin-off from TPG a long time ago. It's now sort of gone through a bit of a pattern of, exuberation. It's fallen flat, come right back, and then sort of a drifting sort of pattern here. You can see a bit of volume through here, then a bit of a drifting pattern, very total lack of interest through here. And now all of a sudden, we're starting to get a little bit of volume starting to appear. I'll just push this up a little bit. Okay, you can see some nice little volume starting to appear with this rally here. We've got very good momentum and the moving average. So again, there was possibly a trend reversal pattern here we could have taken. We didn't take that because this is not really the stocks we cover, but I'm just really observing this from a new high point of view. If we do make a new high, we've got a trend that's already developing quite well. We've got very good volume, it's got good momentum, and now if it does break into new highs, that's a real stamp of strength on the stock, and we may well see this guy rally a bit further. For the moment, trend intensity rating is +2 because we still don't have the signal to buy, so we can jump on board above the high here if we need to. Okay, and it's a fairly conservative trade. So it's just really a bit of a price analysis supported by the indicators that make up the trend intensity indicator. Okay, so they're all there and they're all positive. A simple picture with an expected simple outcome. So again, we don't really know the whys of this. We just need to see the fact that it's happening, and we can see this stock is making a new high, or about to make a new high potentially. We don't want to anticipate these things, do we? But if it does, it's certainly an opportunity to follow. Okay, the next one I want to have a look at, a little one called Life 360, which has been doing very nicely of late. It had a huge correction, got well ahead of itself back here, got it to $14, and was shortly after back to around $2 down here, which was a fairly big crash for that stock. But since then, we've seen a pretty interesting recovery here, and this is also now showing a lot of potential. So I don't know, and many of you follow this stock, but it just looks interesting to me. When we look at what since has happened since the lows here, we had quite a nice rally here, a bit of few green bars through here, and the price was quite good. It then went into a very flat period, and the volume came down, a bit like Tuas. The volume started to come down, a bit of lack of interest, but it holds above the old high. And that's a very, very good sign. And then we start to see the buying start to jump in here, start to push this suddenly higher again, and more volume here is pushing this out of a trend reversal pattern. So we've got the high here, we've got the high low here, and this is the point you want to break for a trend reversal. So this is the trend reversal build up, and this is now the confirmation through here, and now it explodes into a new trend move with good volume and good momentum and above the average. So its trend intensity rating is plus 10. So that's just another little stock of interest you might want to have a look at. But mainly we're looking at the insurers and the banks today, and the two very, very different pictures there for the moment. So I hope you get that story. So now I want to go into trading tactics. This week, the need to understand, as I said before, is overrated, whereas the need to simply follow and manage is probably underrated, but very necessary if you want to make some money. So trading tactics, so understanding the why of the market. We always have a need to do this, hang on to tangibles. It doesn't really help us a lot. So really what we do, understanding the why of the market and profiting from the market are two separate things, how we do those things. So we can look at the why of a market, look at what a stock is, but actually what the price is doing is something different. So what we're doing is we're riding the waves of the emotions that we have, in and out, up and down, wherever. This is central to our focus, to try and capture these emotional moves that drive prices quickly and to jump off before they stop. You know, the old wave, the wave breaks and it comes on in and it ebbs back out again, and that's the end of the wave. So it's all you really need to know about this, you know, how these stocks move, what part of the wave are we on now, depending on what stock you're looking at. Is it ready to get on or off or stay like the insurers, or not anything yet like the banks? We're just trying to capture those waves of emotion and to ride them. So how do we try and best to do that? The answer is a systematic analysis of the repetitive price waves to bring about consistent outcomes. And you can see there's beautiful waves coming through here, all looking very similar, but each and every one of them is different as to how they perform. And that's just like a stock market as well. Like stocks, they all move in these waves. They go in and they go out, but they all behave a bit differently. So at certain points, we know there is a high probability of a price developing, and that's typically when the wave breaks. And that's what we're looking for, when that momentum move is about to happen. So this is what we're trying to capture, the wave breaking. So once that breaks, the price moves can have negative outcomes. The wave may just flounder and not do anything, or the wave might break and it might be a really good ride in. So you can get negative outcomes and positive outcomes depending on how the waves break. Okay, so the negative outcomes, when we're trading, because we aren't perfect, we're not going to get everyone right. But the positive outcomes are the ones we do want to get right and we do want to build on. So control and management is the next step. Once we've done our systematic analysis, the control and management is important to what we do, and this guy knows exactly how to control things. He's going to do a very important job. But what we want to do is we want to restrict negative outcomes and build on positive outcomes. Okay, and the way we do that, and you will have seen this before, it's a very simple process. Control and management is based on this premise. Of the 4 potential outcomes of a trade, you have big wins, small losses, big losses. Number 2 and number 3 effectively cancel themselves out. Hopefully your small wins might be a little bit bigger. But the big one, number 1, the big wins, we build on that and we let that run as fast as we can. And the losses, we just cut them off at a certain level, so we know we don't take big losses. So as long as we take big wins and don't take big losses, our bias is going to be to the upside. So that's where we lie with that. So just a little bit about, you know, I know people want to understand why stocks do things, but it really tells you a bit about history, not so much about what's going to happen. It's really about how we drive prices and how we push them forward is what we're really interested in, because that happens, and you see prices crash when people are bullish, and you see prices rise when people are bearish, all this sort of stuff. So we need to be able to detach from those moods and put them into actual things that are occurring on the market. Okay, so that's about all I've got today. The newsletter was out last week for those who want to see it. I posted it a day too late, I'm sorry, but it's up on the website now. So really, that's the end, all I really got for today. The trick is to ride the waves the way we know they'll develop, not the way we think they will. Okay, we can get extra bullish at the highs and extra bearish at the lows. It's only a natural thing for us to do that. So you need to be objective and take control is what you really need to do when you're trading. Okay, so that's about all I've got for you today. I hope you enjoyed the show. I'll be back next week, and I'll see you then. So stay safe, watch your trends, heed your stops, give me a call if you need me, and I'll be here next week for more insights from Stockradar. Okay, thanks very much.